But did you guys all make money? World did good. Some of you might have got a little bit twisted up, sounds like. Okay, break even's good. You guys see, there's some good lessons in here today on that turn, though. You got to really pay attention to those cycles, and then it's just anytime you're buying the dip late on the cycle and it turns, the only way to kind of make up for that is you got to cut risk, go the other way, or start to have the other side of that trade on the pairs trade, and then add to that side. When you roll off the top like that. The mistake that some people make, a lot of traders, they buy that last few dips and then they fight it, and they're ignoring the fact that the trend's completely changing, and then you miss all the power and the opportunity on the other side. That's where we got to keep working on our. It's not always so much about the direction as how you work your position, right? Like if you were short here on the low is heavy, you're not going to be able to do much on that, on this bounce. But if you were really light at a bad spot, you can work that at the same time doing other things like getting long on dips to help offset that. And then no matter what, if you get on the wrong side, you don't want, even if you're buying that dip late, we don't want to have 1 or 2 contracts go against us and then turn it into a 4, 5, 6 contract loss. So regardless of if you've got good location or not, if you start to get over your skis in a position that goes against you, you just want to start cutting risk based on, am I losing too much on this play? And then that gives you the opportunity that if you get one wrong, right, and you're going to make up for it on the next couple opportunities. And keep working the thing that's, that has the momentum. Sometimes when the cycle's turning like that, this could be true for big picture too. You might have some stuff you're long, and then some stuff you're starting to short, and ideally you're kind of balanced right at the pivot. And that might seem to some traders like, well, now you're just net flat, but no, not if you work in your position so that if I hold, I start to get longer the thing that starts to move back up. If it breaks, then I start to get more short the thing that's breaking, and then I come out of the thing that's getting reversed. Looks like we're going to try to test the lows though. Yeah. Well, and that's why if you guys remember in the model, it talks about that 80-20 rule. So if you're buying the dips well in the morning, you get late in that 15-minute cycle, you can't just keep getting real aggressive on those 1-minute dips. You got to lighten up on those last few pullbacks, especially if you've already caught a lot of the move. I mean, you're gonna get caught sometimes at the end of a move buying the dip, but you just don't want to get crushed on that. And then you want to be able to take advantage of that, because this is where the chance to get heavier, and then the bounce is easier to sell, and there's more vol. I mean, when you're late cycle, guys, like they're only when you're late. I'm talking about near-term day trade cycles. If you're late cycle on the 15-minute, 30-minute, the only way you can really get heavy is if you keep a profit cushion. Some days you're going to have that 1 minute that just goes like for an entire hourly cycle, right? It just will not break. At each of those pullbacks, you can buy it, but it's not each pullback you're buying 3 lots on the 1 minute, because then you get a 5-minute drop and you're already stuck, right? The only way to get heavy in that move is if you buy 1 lot here, goes up, you have a profit cushion, you buy another 1 lot, you keep your break even, goes up some more. You can even add at the higher high, right? So now you go from, can you guys see my purple 1 minute? Add one, add one, add one, add one, add one. I could be long 5 contracts late cycle, but I'm doing it with the idea that I'm keeping a really tight break even, so that if it pulls back and dings me out, fine. I didn't risk, right? I'm not giving it all back late cycle. If you're late cycle, you get a pullback, you buy 3, then you get a 5-minute pullback. Now you're long another 2 because your average sucks. And now the thing turns and you're just lost on 5 contracts. It's completely different. You're basically getting aggressive late cycle. And you can parlay something late cycle, but you got to do it with the profit cushion. You play with the house's money. Don't fight something that when it's late cycle like that. And if you were to put yourself in a situation where you're like, oh shoot, I shouldn't have bought that much on this little 1 minute, now the 5 minutes breaking, that's when you got to get, if you're in this example, if you're long, let's say 4 contracts on a 5-minute pullback late cycle, then you got to get something on the other side in case that, because you know there's a chance that's going to start. That's exactly what happened here. I wasn't heavy, but when that 15 minutes started to roll over, it's like, all right, we better short some more Russell and or S&Ps. And it's kind of the same big picture right now. It's like I still long I'm long 3 contracts and futures and S&Ps, but I'm short the Russell, and I did go short the NASDAQ last night or this morning, yesterday. So now on this 4-hour pivot, I'm going to sell the Russell again right here. So now if the big picture, if the market wants to roll over, that's kind of where we're at in the same example, right? If this intermediate term starts to roll over, I'm going to add to my Nikkei shorts. I'm going to add to my Russell short. Actually, what I was short, I can't remember where I laid out a short on NASDAQ, but I covered it already. So if it bounces, this is core trading. So in other words, we haven't made the call to go bearish the NASDAQ yet, right? But you're at that pivot point where if you got caught, if you're still too heavy long, you got to start thinking things that are more bearish in case this turns. That's being long the VIX, buying more treasuries. And then when it starts to break, it's easier to roll into something like, okay, maybe I'm only long 2 lots on the Dow. I take that down to long 1, big picture. And then I'm starting to add to my Russell short. I end up getting short 3 to 5 contracts there, big picture, on the right bounces. We did buy some puts on that NASDAQ triple. I might add to that too next day or so. It's always the same thing. It's always the same thing. It's the cycle turns, trend, TMS changes. It's kind of how are you going to play those turns? It's kind of where you want to get good. So I think right now you could still be buying this dip. But if this low breaks, then you got to start to rotate into more risk off. And then it's like when we're day trading, you get the 15-minute, 30-minute low. If we got back towards the 50-day, then you can start to put some of those longs back on. And hopefully you're making money on the shorts on the way down, and then you feed into some more longs. If that breaks, you stay with the shorts. Maybe you add back to those. Take the long risk off. That's a pretty good spot right there. 20, what is that? $32.18 is a big level. Yeah, the turns are tough, right? I mean, you guys are doing good. The turns are tough. The other thing when you're breaking, like in here, it's okay if you're long, you cut risk, and or if you were to go short, I mean, you gotta be selling more in here. And then if you have a pairs trade on, if you short when because typically you wouldn't start a trade at a new low, but sometimes you gotta just hit this down in case you get the bigger flush. But then if you do that and then you bounce, you can work out of some of the stuff that you're long, and then you feed back into the short more. And that sets you up, kind of resets you on the new move. That's why a lot of times I don't always get flat. I try to start to short more here, but if I would still long some stuff, I don't always want to just kill it all in case you do get the bounce back. Then you come out of the long, and then you got more room to short. But if you don't sell it here and you don't get the bounce, then it's just you missed the direction change. All right, guys, I'm gonna grab some lunch. Good stuff. I did about 1800. Probably try to grind out a little bit more. If we have a really weak close, there's still, I mean, we're only down 1%, so there's no reason you couldn't go another 1 to 2% if something really breaks. But every time the market looks like it gets in this position, it just 2 days later we're back at new highs. So I do think that 3,400 matters, though. I think that makes a lot of sense. And now if the VIX blows out, those guys are going to unwind all that positioning even more. All right, guys, I'll hit you on the chat. We'll see how it closes out. There's a lot of good movement this week. All right, talk to you later.